Coming up today, the Russell 2000 hits an all-time high. Bonds stage a huge rally on the back of a new Treasury Secretary. Bitcoin pulls back from 100,000. Michael Saylor buys another 5.4 billion worth. And everything else to get you prepped for this shortened trading week. Let's have a good one, guys. And a warm welcome back, everybody, to the Daily Market Review. Hope you're doing well out there. And for those of you new to the channel, my name's Jared. And every day after US market close, I make these daily market reviews, breaking down all the most important news, data, and charts across financial markets to keep you informed. I'm also here to educate and entertain you. And so these daily market reviews are completely free to watch. You don't even have to click that like button, as my goal is to help you become a more successful investor and trader. And for those of you wanting more, I do offer some services where you can follow my real money trading account. With my new stock picks account, already up over 30% since I started it in June, tripling the market's return, and that's with no leverage and a very diversified portfolio as well. And due to overwhelming demand, last week I launched a new swing trading alert service, where just like my stock picks, I send out all alerts before I make the trade in my real money account that you can follow. And I've had a massive response with available spots filling up quickly, as I can only accept 300 members onto this service, with currently 96 spots left as I speak. And so if you too are interested in jumping on board this, then click the link below this video, head on over to my website, clickcapital.io, and sign up today, as it's looking like all available spots will be gone at some point this week, with the first alerts going out last night. And so trading in this new account has already begun. And a huge thanks to everybody who's already jumped on board. All right, just diving back in the daily market review. Once again, small caps taking the lead. Russell 2000 officially breaking out to a brand new all-time high today, just going out to a monthly chart, that high we made back in November 2021. With a beautiful, clean textbook breakout today, taking us into blue skies. There's nothing more bullish than all-time highs. There's no overhead resistance. Everybody who's long is in the money. And as many of you guys know, as a small cap bull, this is what we've been talking about and looking for all year. A nice clean breakout in small caps, and that's what's really helping to light up the stock picks portfolio, as I've been positioned almost perfectly for this latest run in the market. And hence why my members are very happy, getting lots of great feedback, which I appreciate all you guys sharing with me. We also just got confirmation of a bull market using one of the oldest technical analysis techniques out there, Dow theory, created by Charles Dow, financial journalist back in the late 1800s, worked for Wall Street Journal. He said a bull market's confirmed when industrial stocks and transport stocks both break out to a 52-week high. We've actually got both industrials and transports breaking out to all-time highs today, showing that we've got wide participation in this bull market. It's not just tech stocks. That was last year's story. This year's been a story of a broadening out of the bull market, not only looking at the trends in market breadth, but also in earnings as well, with the gap between mega cap tech and small mid-cap earnings closing over the last year and expected to close further going out to next year in 26 actually as well. And there's a look at all the sector's performance ever since the election. When the market opened for trading on the 6th of November, you can see a wide range of returns since then, otherwise known as dispersion. In fact, only one sector negative since the election, healthcare stocks, being punished down after the new admin's pick of RFK coming after the food and pharmaceutical industries. Going to do a big shake up there. Amongst other industries, leading the pack since the election, financials, consumer discretionary, and small caps. And just look at my sector breadth table. What a splash of green across the board. Only thing weak is energy stocks up front, having a bit of a pullback in commodities. Stick with me today, I'll get more into that later on. Along with Michael Saylor continuing to pump Bitcoin, buying another $5.4 billion at all-time highs. But just getting back to what's hot in the market at the moment, quantum computing still going for a run. Rigetti Computing here, up 58%. Like I've been saying for a while, mega cap tech has taken a bit of a back seat. It's these really early stage, small cap growth companies with just huge amounts of money pouring into them with monster volumes on them. Here's the latest one, Arkit Quantum, another quantum computing stock going on a monster run, as did QUBT again today. Stock started the month a bit over $1. Here we are at 7, the hottest sector in the market. Not too far behind, EV toll stocks, electric vertical takeoff and landing, air taxis, Archer Aviation, up 23% today. Joby, another 15%. And that stock NVDA recently invested in, Applied Digital, also continuing its run today, along with some of these former high flyers, Upstart, and a beautiful technical uptrend here. Big momentum volume thrusts higher. And this is another one of these stocks, well off the 2021 peaks, but have been basing out and breaking out here with these really strong moves off the bottom. One of the best performing stocks this year, Dave. They're a digital banking service. Here's a look at their website. Super simple. Get cash instantly with Dave Checking. Got 6 million plus members. Just a really simple banking app, as we're seeing more and more hot fintechs out there, with the biggest PayPal leading the charge off its monster multi-year base as well. And just look at that return on Dave. Started the year on an 8 handle, it's gone up 10x. Having a really good day today. and helping to propel the stock picks portfolio to an all-time high. Hims and Hers Health breaking out to a new yearly high on monster volume. Just after we got news a week and a half ago, Amazon was entering the telehealth market in what now looks to be like a classic shakeout. And just like I said back on that day, I didn't think Amazon would be a real risk to Hims and Hers being able to succeed. They're a pure play on telehealth, growing like crazy, still a reasonable valuation, and that's why I continued to hold long and strong, and we're being rewarded here again today. And it's not just these new hot sectors, it's also the traditional technology and software stocks, just small cap growth, red cat holdings, going on a monster run. Now, of course, this is not going to last forever. Things are really hot right now. We're bound to have a pullback, consolidation, correction. However, there's nothing wrong with making hay while the sun's out and riding a few of these trends, because that's our job as small cap investors. And one sector may have already started its pullback, the really hot nuclear sector, nano-nuclear energy, having a sharp pullback today, down 22%, just showing you that volatility can go both ways. And even the healthiest of trends get too extended in the short term and then pull back. That's why it's important not to chase hot prices. I always prefer to wait for the pullback. SMR actually putting in a bit of a bearish engulfing candle there today, along with a bit of a pullback in Oklo. What had been doing really weak going into and coming out of the election, large parts of the clean and renewable energy sector, like fuel cell stocks, FCell, been getting a lot of volume late. Big push up there today. Similar pattern on others as well. Plug Power, pushing up off the lows on volume. Canadian Solar, Solar Edge Technologies. There's a look at the solar ETF. Maybe trying to put in a bottom here and potentially some accumulation on a bit of a contrarian play. New admin may not knock over this industry after all. We'll have to see how that plays out. And so quantum computing, EV toll, AI, space exploration, nuclear, these have all been really hot sectors of late. What could potentially be next? Maybe 3D printing, starting to see some signs of life in some of these 3D printing stocks. Triple D, up 7% today on volume. Stratasys, catching a bit as well, along with Proto Labs, pushing up on this key resistance zone. Another one on my watch list, Materialize, 3D printing stock coming out of Belgium. Certainly looks a little interesting. Nano Dimension, big push off the lows. And just looking at the sector ETF for 3D printing, did break out to multi-month highs today, but still a little bit off those highs from late last year. So this will be one sector to keep an eye on. It could indeed join in with these other hot sectors and going on these monster runs. And so that's what I've been looking for my Stock Picks members of late, is what could be the next hot sector to run, and 3D printing is definitely on my list here. But let's just pivot back to one of the biggest stories in finance at the moment, and continuing on from last week, Bitcoin literally got within $200 of hitting 100,000. Looks like we're pulling back a little bit here. Currently as I speak, let's just go down to a 5-minute chart and take a look. Got a bit of a downtrend, already pulling back almost 7% after getting just shy of the big psychological level 100,000. And so you often see that in markets. It can hit the psychological level or just before it or just after it. Then it can kind of pause, consolidate, pull back before creating a consolidation and going further. However, if you get that big red candle, that could potentially mean something different. And we should have known last week when we heard from the man who rarely misses, Jim Cramer, who said when it was just below 100,000, all I can tell you is to own Bitcoin. But guess who's back at it yet again? He just can't get enough. Greed is a disease. MicroStrategy has acquired 55,500 Bitcoin for $5.4 billion at 97,862. With MicroStrategy's average cost now almost 57,000 per Bitcoin. And Saylor likes to get clever with his wording, theories, and technicalities when he's referring to a BTC yield. But like Peter Schiff points out, his use of yield to describe paper gains on Bitcoin holdings that your own leverage bind enabled borders on fraud. It's so obvious, trying to corner the market and orchestrate the biggest pump of our lifetimes. What an absolute racket this fraud is running once again. And I'm very confident this will not work out for him or the investors he's lured in again in the long run. But unfortunately, just like back in 2000, it's his investors, many of whom are retail traders, that will ultimately be left holding the bag as he systematically offloads MicroStrategy shares onto the market. So when it inevitably crashes, he'll blame somebody else, walk away with billions, and start planning his next pump. Otherwise, he's given his best shot to try and corner the Bitcoin market. Already owns almost 2% of Bitcoins, and if he has it his way, he'll be the world's first trillionaire, just from cornering a digitally created coin that nobody actually uses for its original intention, an anti-fiat form of currency. And so like I said last week, in my opinion, Michael Saylor's perverted Bitcoin and its original purpose. He's helping to drive the price up himself, pulling as many people on top of him as he possibly can, and he's kind of just levering up the whole Bitcoin market. He's on video as saying everybody should buy Bitcoin and figure out a way to borrow more money to buy Bitcoin. He wants you to go all in on Bitcoin. And it's amazing how many people are buying into his latest pump. I've even been hearing people online saying MicroStrategy is destined to be a top 10 company in the next 2 years. So many people are convinced on this, that his infinite money loop is just going to work into an infinity. But it's not just all retail traders either. Wall Street analysts jumping in on the pump. Look at Bernstein saying it's unprecedented Bitcoin buying could push its stock up another 49%. They own 1.8% of the total Bitcoin supply and plan to keep increasing that. They think the company will own 830 billion or 4% of the total Bitcoin supply by 2033. And that's the thing with bubbles. It just blinds even the most smartest people out there. You can go back in history. In fact, looking at probably one of the most brilliant human beings to ever exist, Isaac Newton. He got caught up in the South Sea bubble 300 years ago in London. And again, this is just my opinion. I don't know for sure if and when it's going to crash. And like I said, I've got no problem with riding the uptrends in Bitcoin. Certainly is money to be made. I just feel strongly that MicroStrategy and the guy with a track record of fraud, tax evasion, and God knows what else has not found a new infinite money glitch. It's not a new paradigm. And his stock is inevitably going to crash just like it did back in 2000. And that could happen even if Bitcoin just pulls back 50% or more, which it has a strong history of doing. It's a massively volatile asset. Bear market's down 70, 80, 90%. If we get another one of those bear markets, that could wipe out MicroStrategy and not just equity holders, potentially bond holders as well. But that's the thing. No one knows how crazy it can get. Bitcoin could go to $1 million. MicroStrategy could go to $2,000, $3,000 a share. I'm not saying it's topped out now. I'm just saying, in my opinion, I think what he's doing is unsustainable, not to mention not creating any value at all for society at large. But just moving on to the bond market and the economy. We got GDP and PCE inflation data coming this Wednesday, expected to be 2.8% year over year. Ever since the Fed cut 50 basis points and the election, bond yields have been marching higher, Treasury bonds selling off, with the media claiming the market's pricing in the new administration is going to cause a resurgence in inflation. However, all it took is for the new admin to announce who their Treasury secretary is, gave us a sharp pullback in yields, big bump up in bonds, as we got news that Scott Bessent is going to be the new Treasury secretary. Known as a fiscal hawk, he sees a global economic reordering, and once again, we've got big changes coming from many parts of the government, which will flow on to markets. This guy's a former hedge fund manager, he understands finance really well, and this is probably the most important role relative to financial markets. Like the rest of the new team, he really wants to cut spending, enact tariffs, and maintaining the status of the dollar as the world's reserve currency. So this will have knock-on effects all around the world. And in my eyes, all the changes coming could potentially accelerate American exceptionalism, lowering taxes, loosening regulations, cutting wasteful government spending. If America's been able to thrive with all that, what's possible when all the headwinds and red tape are loosened massively? Could provide a very strong and lasting tailwind for economic growth. The market, especially small caps, seem to really like the news. But like top economist Steve Hanke says, the new admin may not spur inflation because inflation is more relative to the Fed and money supply, in addition to fiscal spending, which the new admin plans to sharply pull back. Could actually be a massive deflationary force, which is why I think gold pulled back after the election and bond yields going higher, pricing in better economic growth. Also evidenced by a strong US dollar. Strong economy, strong currency, and so we did get a bit of a technical break there in the 10-year yield today. Breaking this parabolic short-term uptrend, getting the TLT back above its 50-day today. With high yield bonds also looking good, pushing up there, and corporate bonds as well. With high yield spreads really low, 2.6. Bond market is very chill. It's not pricing in anything nasty anytime soon. And just a little bit of a pullback on the dollar, but still on a well-defined uptrend. But how much hawkish is the Fed going to get? Very dovish going into the election. After the election, it was like a light switch. Inflation started coming back on their mind right away. Still yet to be seen. What could happen between these two men? They obviously don't like each other. Could be a showdown. Jay Powell said he's not leaving. Markets adjusted their probabilities on the next interest rate cut, almost 50-50, looking out next month, and really pulled in the terminal rate, where they think the Fed will be done to around 4% now. Big change from a couple of months ago. The market and many people certain we're on a verge of a recession, which that looks like it's been pushed out a bit further again. As we can see in the 10-year, 2-year yield curve, now back to break even, after we got that inversion back in early September. Like I said, a lot of people convinced we're on the verge of a recession. However, like I was saying, the yield curve may have also been perverted by Janet Yellen and her 3 standard deviation actions of front-loading the US debt book with so much short-term debt, artificially keeping short-term rates low, not to mention the multi-year knock-on effects from COVID, and that massive 10 standard deviation event as well. So like I said, the clock could be getting reset on when we should expect the next recession. And the structure and fundamentals of the yield curve may indeed be altered. Not saying it's wrong, just saying it may have changed because we've had some big changes that we haven't seen in the past. But like I've also been saying, we should expect a pushback from those within, which appears to be already taking place. We just got news today that Tesla is excluded from an EV buy credits in California proposal coming from Governor Newsom. With Elon commenting on the post, even though Tesla is the only company who manufactures their EVs in California, this is insane. He's also experienced political attacks on SpaceX, for which he's taking some departments to court. And so like I said, we're on the cusp of big changes of how the United States is run from the top down. No doubt many within are feeling threatened. They hate seeing political outsiders with Elon really coming after them, saying today on X, your tax dollars are paying to air condition and heat thousands of empty government buildings, and also posting a meme that federal government overspending is what causes inflation. So like I said, this new admin looks like they didn't just say all this to win votes. Looks like they're dead serious about taking the butcher's knife to bloated US government spending, and that's actually likely to be deflationary for the economy and markets, and may actually help to offset the immediate inflationary effects from tariffs. With the current US government running a budget deficit in excess of $2 trillion, spending over $6 trillion a year while only taking in a little over $4 trillion, simply unsustainable, with almost 20% of all workers in America government employees. So if they're taken out of the government, that leaves them to go back into the private sector, working for entrepreneurs, helping to be innovative and create new wealth, which is a great idea in the long term. However, it's likely to come with some short-term pain. And like I said, we should expect more attacks and manufactured controversies from those within. Next up could be this guy. And it's moving on to commodities. We're getting news that a ceasefire deal between Israel and Hezbollah is looking likely within the coming days. And that's what's given gold a sharp fall here today, 3.4%, which is a big move for gold. And like I've been saying of late, even though the media's been saying the market's pricing in a resurgence of inflation, that's not what it looked like to me just looking at gold. Because ever since Biden gave permission to Zelensky to send US missiles straight inside Russia, gold shot back up. Now on the back of news of geopolitical tensions dialing down, Russia did their response. Things look to have calmed down for the moment. Gold's had a sharp fall, along with crude oil as well, which is responding to geopolitics. Not as much as gold, but definitely had a sizable move there today, down 3.2%. Well, we've still got natty gas moving up as the northern hemisphere moves into cooler months. And we actually just got a sharp pullback on the market's pricing of inflation expectations itself. Looking at the spread of inflation-protected securities versus regular, that's the election, where the market initially responded with a big gap up in inflation expectations. However, that was the high. The market's now actually pricing inflation lower than the day before the election. So in other words, I don't think the market for the here and now is expecting a resurgence in inflation, although for sure, we cannot rule that out. Anything is possible. And we'll actually get a taste of that this Wednesday when we get PCE, personal consumption expenditure data, expected to come in 2.8% year over year. And unless we get any big surprises there, which I don't think we will, it should be a quiet week. Usually is in Thanksgiving week. Markets shut on Thursday and just half day Friday, closing 1 p.m. New York. Normally is a good week looking at seasonality. However, things can get spicy. Some of you may remember 2018. Going into Christmas as well, market was selling off sharply. However, this market does seem to be on firm footing at the moment. Not only looking at the broad indices and sectors, super hot small cap growth. We've got volatility pulling back here, 14.6. With option dealers only demanding a point in premium over realized. So that's a pretty good sign. Along with a big pullback in bond market volatility ever since the election as well. Things have kind of calmed down here a bit. And look at that move in mid caps, catching a bid. And just look at that monthly chart. Textbook, multi-year consolidation, just grinding up. Now we've got the uncoiling breakout. That's a really good technical sign for things to come for mid caps and small caps as well. Nice big rounded base here, breaking out, and hence why I'm excited to be well positioned in small cap stocks. And that's pretty much a wrap for the daily market review to get this shortened trading week kicked off, guys. Thanks very much for tuning in. And once again, huge shout out to everybody who's jumped on board my new swing trading alert service with me. Really excited to have you along for the journey. Like I said, I'll be sharing all my ups and downs we're inevitably bound to encounter as I attempt to turn this new account into $1 million in under 10 years. And to anybody else interested in jumping on board for the ride, head on over to my website, clickcapital.io, and secure your spot before I close it to new subscribers. Thanks very much, guys, and I'll see you again tomorrow night. Cheers.